All right, we're 45 minutes away from a USDA report. Let's talk to Brian Hoops with Midwest Market Solutions. Brian, with this last 45 minutes before all of this information starts to hit the wires and hit this market, what's your advice? What are you hearing from producers that you're talking to? And how do you get ready for so much uncertainty with so many moving parts in this market right now?
Yeah, there certainly is. And good morning, John. Good to talk with you. You have the report coming out at 11, and a lot of the trade is looking at this report and already figuring we're going to have a deviation from the planted acres as we go into the spring time frame. Maybe this will be the largest corn acreage number that we see, as these intentions were at the first part of the month for corn, and now prices have dropped off quite a bit. Of course, weather will play a major factor in how many acres are being seeded, but from talking with producers, a lot of them are really talking about the lack of ethanol demand, and especially in some local areas, if they have one or two plants that are shutting down, what are they going to do with their crop? The basis levels are widening out quite a bit, and there's a real concern about selling and merchandising that corn into the future without these ethanol plants. So either we need to see that these plants come back online. We may see some shifting going into soybeans, and if conditions are too wet, even close to being too wet, I think we'll see a lot of prevent plant being put into the crops this year. Last year we had corn acreage planted even in too wet of conditions because the market rallied enough, $4, $4.15, $4.30, up to $4.70, incentivizing the producer to go ahead and plant during wet conditions. We certainly don't have that incentive this year as producers are making preparations.
Right. Well, and not a whole lot of incentive here today either as well. May corn down 1.5 at 339 3/4. I do want to point out that this contract got down to 339, just a penny away from what some traders are saying was pretty strong support there at that 338 level. You go out to the December to the new crop, we're down 2.5 at 357 1/4. Over in the soybean market, May is up 1 3/4 at 884, but the new crop November is down 1.5. It's at 873. That leaves us 3 pennies off of the bottom. July Chicago wheat up 3.5 at 561 3/4. What's the strength behind the wheat?
Yeah, you look at the wheat market here, and you would have thought maybe some of the news that came out yesterday afternoon with an increase in crop conditions would pressure this wheat market. Kansas conditions up 2% to 50 good to excellent. Texas up to 56%, and that's the best in the last 5 years. I think this market is trying to signal to producers that it's expecting a little bit better export demand with Russia being out of the export market until June. We may see some export business, but I really encourage producers, you have to look ahead into the last half of that 2020 marketing year. Russia's going to produce probably their second largest crop in history and are going to undercut our prices. So they're really going to dominate the exports in the last half of 2020. There's some good hedging opportunities out there.
July Kansas City wheat up 5.5 right now. It's at 498 1/4. I do want to look at crude oil. We did rebound just a little bit early in the session, with May up 47 cents now at 20.56 a barrel. But that September down 9 at 30.91. The heating oil market kind of following suit. It's a little bit lower, just a little over a penny lower now on the May contract, right at $1.33 a gallon. Brian, stay where you are. We're going to be back in just a moment to continue this conversation right after this on the Market Day Report. Let's pick up where we left off with Brian Hoops, and we'll talk about this live cattle market here today, over here on the April contract. This is a market that had a little bit of weakness here early on, down 90 cents at 98.30. June down $1.13, August down $1.03. Brian, it's time to start coming up here with a few of these bids and offers here for some cash cattle trade. Have you heard anything? Is there anybody tossing about some ideas, or is everybody just kind of sitting on their hands and waiting till later in the week?
Yeah, everybody's kind of sitting and waiting, taking that attitude that, hey, we had 120 last week, we want that 120 again this week or something very close to it. Futures don't seem to be cooperating, and I don't think the Packers are in any real hurry to pay that like they did last week. We're going to see something, I think, far less than the 120, just not really sure how far less, and we may not get an indication until tomorrow when we have the Fed online auction. that could give us an indication of how aggressive the packers may want to be this week.
Okay, April feeder cattle and all the rest of those contracts over in the feeders down 242 on the April, 117.63. May down 273. August down 263. You go out to that October, we're 313 lower. So, Brian, this feeder market continues to leak lower also here today.
Yeah, it really does, and that is where most of the weakness is coming in some of those deferred feeder cattle contracts, and that is, I think, a little surprising. It seems like the producers have really backed off of these feeder cattle contracts and stepping away from them. This is about a $15 break from the highs that we had just last week. So in here somewhere, we probably are going to find some sort of a technical support area, and that could produce a little bit of buying. But until the demand really starts to return, these feeders may just continue to stay under a little bit of pressure.
What's your opinion then? Do you think that these the feeder buyers are just a little bit cautious about demand here in the U.S. because of all of this coronavirus issue?
Yeah, absolutely. I think that's the real concern right now is longer term demand. If you buy these calves, they're probably cheap enough, but can you make a profit on them, or is there going to be a home for them down the road? Can we export them, or can we kill them here in the U.S.? And until things return back to normal, we really don't have those answers. But I think at some point we'll get back to more normal life, and we'll reward the producer for being a little aggressive in buying these calves right now.
April hogs down 25, 53.70, but the rest of those contracts higher. The further out in the deferreds you go, the stronger we go here, Brian, over in the hogs.
Yeah, it seems like a little technical bounce. We ended limit down yesterday, and it is turnaround Tuesday. It just doesn't feel like this is, it's not being led by bull spreading. It just feels like this market is going to continue to struggle. Some of the bear spreads are leading the market higher today, and just feels like a technical bounce more than anything. Okay.
Brian, thank you very much. Always appreciate it. Christina, We'll see if that technical bounce will carry us all the way into the close today. And just a quick reminder, we've got that USDA report. We're going to be covering that in full detail coming up. Stay with us.